Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. This is the chart of silver price in US dollars on the quarterly scale, and I'm showing you the wave count that I suggested quite some time ago, the very long-term wave count, where we find a 1-2 behind us, third wave behind us, and we are either still in a fourth wave, or maybe we have actually the fourth wave done right here, and this is a huge impulse wave, fifth wave. It could be even something else, of course. It could be a 1-2 situation, but let's go with a more conservative one. We don't have really any clear indication that the fourth wave ended. Why? Well, it's very simple. Although silver is looking like stable to up kind of situation, yes, it is stable. It hasn't broken through critical levels of support that I'll show you when we look at the monthly, at the weekly, and it is beginning to look up. So things could be looking up here, fair enough, but even if we run and we exceed the previous high here, even if we do that in an impulsive manner, this will still not confirm that the fourth wave is done and we are in a huge impulse wave that will exceed 52 plus. No, because this could be an A, B, C could be a B, and you get the rest, yeah? C, D, E, and we're still stuck here for a few more years. Right now, it is on the chart here, we have no indication, if you like, extremely strong indication that a huge impulse wave started. As I just told you, the argument can be played both ways. We go up, this could be a C, or it could be a third wave. We will only know or get the first, if you like, big hint that we are in a huge fifth wave or a huge third wave up, and that is indeed a 1-2, and we're going up in a huge third wave only when we exceed this level, and depending how much we run above that, and then we don't come down there, we just get stuck here, and that will tell you that this is a 1, 2, 3, 4. We are indeed looking at a giant move to the upside. Okay, right now we can sit and debate day and night. It's not going to help anything. We cannot solve anything here. The potential for both is right there. How about going down? Well, given the jump from the bottom here, this is clearly very, very powerful. And given the correction that has been going on now for several quarters, and all it has achieved is to come back and retest critical levels here. So the odds not looking that bad for the bulls. On the other hand, we don't have it in the pocket, as they say. It's no guarantee that we're going to get this now. It's looking better, but it's no guarantee. I'm going to show you the monthly. We still have to contend with the idea that we could have a resurging DX, yes, and that could weigh down the price action here. So that's the idea. 3, 4, or 3 and 4 still ongoing. That's the monthly, and here's the critical level. Pretty easy to see, and you can see that it came several times to test it, but no break. That is of course playing into the hands of the bulls. There's definitely an argument here, right here. Even the very recent one went down to the other side of the channel, bounced back. This is positive. Okay, so the bulls can come here and say, hey, you can't see. We've got here 1, 2, 3, 4, 5. What you can't see, this is an ABC. It's ready to fly. And I would say, yes, the technical picture would allow this, certainly. Yes, certainly. One thing is certain also concerning the bearish side. If you come back and we break the bottom here, that cannot be taken in a bullish way. I think that will be really negative. Yes, so this is absolutely critical that it shies away from these levels. Got no business coming back here. If we are indeed in an ABC situation where the target, the immediate, if you like, target for the next few weeks, if it's impulsive, it's going to look like that. Yeah, is 30 plus. Then obviously it's got nothing to do here. It's got no time. It's got no time. It's now busy looking up very strongly. Now I'm going to show you how all this plan of the bull is going to get a big puncture and it's going to get grounded. Right now, that's the best scenario for the bulls, A, B, C. Now you are familiar with my alternative wave counts, yes, where I'm calling for even a 1, 2, 1, 2 situation here, but the key is right here. That's where it's going to stand or fall. And we've got to go to the details because there is nothing better than looking at the current situation where the base is containing what I see is harboring here potentially big hint. So you remember the pound US dollar? We have almost an identical structure here. And it's not just a pound. There are quite a few other forex pairs against the dollar that trace similar pattern like that. Now, either we are dealing with this, in which case this is an AB or AB, and that's a C, which means it comes down. It comes down like that. Forget about the bullish side for now. It's more likely it's going there and potentially it's going to plunge. No matter what the inflation figures are doing, this pattern has a certain message. Yeah, it comes down here, the odds will increase. We are just playing the odds. We don't have certainties here. Yeah, we don't have certainties. I wish we had. When we don't have certainties right now, the AB could still work even if it notches here slightly higher and it ends the 1, 2, 1, 2, 3, 4, 3, 4, 5. Then watch carefully. Watch carefully. It stays around here. Excellent news for the bulls. This will take over this wave count. That's likely a 1, 2. That'll be 3, 4, and up we go, and the odds will increase and increase and increase. The odds will increase that the bulls are going to have the upper hand. Here's the chart of gold. That's the quarterly, and again the same situation playing out here. 1, 2, 3 probably ended here. Alternative wave count says no. 1, 2, 3. Fourth wave may have ended here or here. We're actually now in the fifth wave of the black scale, which means that gold is going to rise to a new high, record high here. It's not going to go in many thousands of dollars, but it's going to go, let's say, 2,500, at most 3,000, and then it's going to come back and it's going to hang around here between, let's say, 3,000 to 2,000, 1,800. It's going to get stuck here for years, okay, drawing fast the fourth wave. I think it is not very likely, the way I see it, that the big fourth wave may have ended here. It's not out of question. If that is the case, the big fourth wave ended here, we are looking at a 1, 2 right here on the quarterly. Just one sec. You see, that's the quarterly. Fourth wave ended here with an A, B, C, D, E like that. You have a 1, 2, you have a 3. There is definitely potential for a fourth wave here on the quarterly. So that is calling for a jump. Yes, over as much as 1 year to take it well beyond the previous high. We do have something interesting here in this chart. That's the quarterly look. This is really interesting, isn't it? That's the 10 moving average, simple. 10 moving average, simple. And it is supporting the level here, and it is obviously a big support right here. So we're going to watch that. Let's jump to the monthly. and there are some really very critical levels. Also in the case of gold, there are critical levels that the market drew them for us. It's not that we fancy using a certain level. The price action created those levels for us. We simply have to watch carefully and apply the significance to each level according to the price action. You see, for example, here it's pretty obvious, isn't it? You have it just under 1,700, and each time it reached this level, and this is the monthly, it bounced back strongly. This is already 2 times it appeared, and since then, since the second time, it didn't really make it that low, and the whole thing looks like it's a consolidation. The moment it comes down, it cracks seriously this low, you know it's serious. You know it's not going to do it just for one day, unlikely. You get a weekly close under this, and it is almost certainly heading a lot lower. Okay, and that will embolden the guys who go with the interpretation that we are in fact still with this big fourth wave. Okay, a break, solid break of this level will set the stage for further decline. However, up to now, up to now, despite repeated attempts here, the support is holding, and there is nothing in the world to stop us from continuing to use this interpretation that is likely an A, B, C, probably going to finish the D, further lateral movement here, the E leg, and then move aside. Move aside, forget about any shorts. It's going to fly above 2080. The technical picture is definitely allowing for it. It's basically in equilibrium. You see where it's been running up, down. It's right now almost in mid-range. We've got the 50 on the moving average here, 50 weekly, now playing as resistance right here. We'll see how it behaves in the next week or two. If it manages to jump above, it heads towards 1880. That's again a lot of odds are moving to the camp of the bulls. Yes, we are running above 1920. I think the bulls can claim victory in this sense. We are almost certainly heading above 2080. That will be an impulse wave. Okay, so that is basically the way I read it right now. We have a red line here, which is very important. That I think that will be very clear shift of the balance from lateral to really upside movement. I'm going to go to the daily here, and again we've got to watch the details, and that is the danger for the bulls right now, that this would end up being an ABC. You see, I had this as a potential ABC second wave. It's not dead, it's right there. Why dead? It's right there. What could create a disaster scenario for gold investors is this. If that's going to end up being 1, 2, we're going down in the third wave. And the third wave will probably not just stop there. I think it's going to clear the stops, and then we're going to have the usual effect when stops are cleared. Yeah, the traders on the market goes gunning for the stops. Then you have the breakdown, major breakdown, and then you get an overflow, if you like, of the beyond the target. The target maybe is right here. It's going to fall quite a bit lower, but this is all theory. Yeah, this is all theory. It might go down and bounce back and end up the triangle like that. Yes, so in a nutshell, we don't move from our critical level here. We have to focus, laser focus on that. Coming down in the next few days is not necessarily complete disaster for the bulls, but it's not something they should celebrate. Yeah, because it is easily stacking the odds more and more in favor of the bears. Yeah, do you see the ABC here? ABC is a counter trend move. That tells you if this interpretation is correct and it is indeed an ABC, it's going there, 2,720. And as I said, if this ends up being a 1-2, the third wave is not going to stop here. Okay, let's take it one step at a time. My website, the homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here. It takes you to the page where it explains to you. You should read that. It explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you're not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you're interested, after you take a trial, you're interested to come back, you can still benefit from the low price for the next full year. But you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one, highlighting your daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos, okay? So you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. There I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.